Good afternoon and welcome to NYFP. This afternoon I'm joined by Alan Valdes of DME Securities. Hi Alan, thanks for joining me today.
Remy, thanks for having me.
Well, in today's session we're seeing the major U.S. stock averages post in advance, and that does come on the heels of Fed Chairman Bernanke's comments. What do you make of his comments, and do you expect any stimulus measures to come out from the central bank?
I don't think there's any doubt. I mean, if you look at QE1 and QE2, between them the market came in 1,600 points, so Bernanke was forced for QE2. This market's, if not the same, a little weaker than it was during QE2's time. So I think you'll definitely see what they call a QE2, or it's just some kind of TARP buying, but you'll see the Fed's buying treasuries again, boosts the market, doesn't really do anything for the economy in the long term. It's like a sugar fix, like a sugar high, and that's all they're going to do. We have a Fed chairman who's an expert on the depression, so he knows you can't have this market crash. If you take away the equities rally that we've had the last year, there's nothing to this so-called recovery. Housing, double dipping, unemployment, we saw those numbers, they're horrible, 9.2%. Consumer confidence, horrible, spending, horrible. There's nothing good about this economy except for the equities rally that we've seen, fueled only by the Fed, so you'll see it.
Well, Alan, now that I've gotten your take regarding Fed Chairman Bernanke's comments, let's move on to the Eurozone as well as China. Now, we did get better than expected GDP as well as economic data out from China. And also, it seems as though the Eurozone has temporarily moved away from the downgrade for Moody's for Ireland. But how concerned are you overall regarding global fundamentals?
Oh, huge. I think Europe's going to come right back to the forefront after this debt ceiling dies down. I mean, we still have Italy on the front page. That's going to be with us all summer long. Portugal, Spain. I mean, they're not going to go away. I think what we saw with the vote in Parliament in Greece 2 weeks ago, people say, okay, there's the vote, things are going to calm down. No, it hasn't done anything. It's just shifted now to Italy. It's going to shift to Ireland, and then it'll shift back to Portugal. Hope we don't go to Spain, but you could see it. I mean, they've really done nothing but move as they say, the deck chairs on the Titanic. There's been no final outcome to this at all. So I think that's going to stay in the forefront. China, I mean, we were worried about a soft landing. Now it looks like China's 9% growth. That's great. China's going to stay strong. I think you're going to see the emerging markets outside of Europe and the United States stay pretty strong. You look at Brazil, coming off the worst quarter in the world, but now it looks like they're back in play. Vietnam looking good. I mean, I think we'll have a good year outside of Europe and the United States.
Okay, Alan, last but not least, before we wrap it up, now that we've covered the broader themes that are affecting the market, let's take a look at tomorrow's session. We do get U.S. retail sales as well as earnings out from some bellwethers. What do you think will affect the market in the short term?
Well, you're 100% right. Good question. I think earnings will probably trump retail sales. No one expects great retail sales, judging by the job number last week, so that'll be probably already baked in. But I think the earnings have the potential to move the market. Remember, volume's been very light. One of the reasons we're up so good today is very light volume, so it doesn't take much to move the market. So if you get some Dow stocks earnings tomorrow, which you will, that's enough to move the market, keep us on a steady pace. Otherwise, it's a pretty low, quiet day. So I think you'll see, depending on the earnings, a good day.
Okay, Alan, as always, thank you so much for your time and thanks for your insight.
Thank you.